Outside of it, no time with Oh, I'm so sorry. So sorry. All right. So like I was saying, right? I believe you guys can hear me now. Okay. So like what I was saying is today we are gonna make money. All right. But more than just making money, the most important thing is knowledge. Right? Knowledge is the key. And we are gonna try as much as possible to learn some things new, demystify some information. So for those who do not know what I'm going to be teaching you today, this is a good time to learn, right? For those who know already, it is just a time to try to learn better. It's going to serve as a refresher, all right? Serve as a refresher. So let me just go ahead with share my screen. Yeah. Okay. So I'm going about that now. So I believe you all can see my screen right now. All right, you guys can see my screen right now. Amazing. Now, this is what has been happening in the market. If anybody noticed what we did the previous day, we were looking for buys. It took us out. No, it gave us some profit, then it took us out a bit. Just a minute. It took us out a bit. It gave us profit, then took us out. And then Asian session, the market has been moving all the way. Now, I'm going to be using this class to teach us some things that will make you very profitable when it comes to your trading game. And please, everybody, please pay rapt attention to this class. All right. Now, this is the thing I want to teach you. And if we're able to catch a signal, I'll call it out for us. Let me just go to a different chart where I've not annotated around. Let me use this one for instance. Okay. Now, this is in our market. Every now and then, we always come about the different structures of the market. Sometimes we have the bullish pattern giving us this directional bias, right? Something like this. And then we equally have the bearish pattern, which gives us something in this regard, something in this regard, right? Just a minute. All right, guys. Yeah, so I'm back now. So, firstly, this is just the barest minimum. Everybody knows what this looks like. This is a bullish pattern. This is a bearish pattern. This is what we established even in our last class, right? We have the bullish pattern and the bearish pattern. Now, what makes this a proper bullish pattern? That is what you want to understand. What makes this a proper bullish pattern? There's one rule that makes it a very good bullish pattern is because it's always giving us higher highs. Now, this is a buy bullish trend, and let me give you four rules that pertain to this. The first rule is the current, let me use capital letter, the current higher high is always greater than the previous high, or you might say higher high. What do I mean by that? We have our low here, and then our low gives birth to what? A high. Our low gives birth to a high. Oh, permit me. It gives birth to a high. Our low here, then it gives birth to a high. Now, this high gives us a form of retracement, which gives us what? A lower high, right? A lower high. And this lower high, if it can break out of this previous high it has gotten to, it's going to give us what? A new higher high. That's why we get the word higher high, right? Higher high. The higher high also gives us a what? A new higher low. And most times, this is the beauty about this. You guys must have seen me use a lot of zones, right? Market most times will come back to a previous zone, react off it first. If that zone is very strong, it will react off it and probably keep moving in that direction, right? So we have our lower high here, right? Wait, low high. Sorry, it should be higher low. Nobody corrected me. Higher low and higher high. Yeah, higher or low and higher high. So we have a higher low. Yeah, higher low here. Same as this place too. Higher low, right? And it keeps going up like that, like that. It just keeps appreciating that way. Now, the rule basically is the first rule you want to pay attention to on a trade that is actually going all the way up. The first rule is the current higher high would always be greater than the previous high. Same as the current higher low should always be what? Greater than the previous low. So the second rule will be what? The current higher low should always be what? Greater than the previous low, or even what? Higher low, right? That is the second rule, right? The first one is current high should be greater than the previous high. The current higher low should also be greater than the previous low. Now, one other thing you also want to pay attention to is on an uptrend, the eye is always targeted. When I mean the eye is targeted, like market is always trying to take out every high. That is why we have this zone here. If it comes back here, where is market trying to take out? It's trying to take out this same zone. The market is trying to take out this zone, right? If this market comes down again, where is it trying to take out? The eye. What does that mean now? It means that for every of our bullish trend, our highs, right? The highs are targeted. Targeted. Targeted, right? All the highs are always what? Targeted. The market wants to try to take out the high. For instance, you can see this here, when it gets to the higher low, it wants to take out this high. When it has got all the way to this place, giving us a correction, the higher low, the number one place it wants to target is what? This high, right? So on an uptrend, the highs are always what? Targeted. Now that we know that the highs are always targeted, the next thing you also want to know is if the highs are targeted, the lows, right? The lows are protected. You guys get it? The lows are protected. What is the low? For instance, market never came back to what? This low. It pushed up to the high. It gave us a new higher low. Market never did what? Came back to this low, right? The low are always what? Protected. So we always have the market in this regard. The lows are always what? Protected. So we have the higher low in this place, right? The market pushes up again to the higher high. What is always protected? The lows is always protected. It gave us a correction to this zone, right? And then pushed up. You will always see on an uptrend, the lows would always be what? Protected. Do you guys get that? The lows will always be protected. You will not see at any point in time in an uptrend market coming all the way down like this, trying to take out this one. No, it should not do this. It's only once in a while it can do this, then push all the way up. But with the proper structure of market should not do what? Take out lows. It should only take out what? The highs. So, like I rightly said, these are the rules governing what? A bullish pattern. The first one is the current higher high should be greater than the previous high. The current higher low should what? Should be greater than the previous higher low. And then the highs should always be the one targeted, and the lows should be the one, right, protected. Do we understand this so far? If you understand, please drop one on the chat box so I know we are on the same page. Then I can continue. Amazing. Amazing. So we go to the second one, which is for the downtrend. For our downtrend, what are we having in our downtrend? Let's just try to identify them. This is our eye, right? Our eye is somewhere around there. And then we have our low. Our low is here, right? The low gives us a little bit of retracement, and then we get what? Our lower high, right? We get our lower high. That is a high that is lower than, yeah, a high that is lower than the other one, right? Lower high. And then this one goes all the way down to this place. As far as it can break this previous zone, it gives us a what? A new lower low. This lower low does the same thing. We get a what? Another what? Lower high. And the market keeps repeating itself in that regard. Now, what are the rules that govern what? A bearish pattern. The first rule, just exactly the opposite of everything we have here. The first rule that governs the bearish pattern is what? The current, your current, a minute, right? Your current lower high should always be greater than your current lower high should always be greater than your previous high or your previous lower high. That's the first rule. Your current lower high should always be, sorry, your current lower high should always be lesser than your previous, yeah. I was looking at the other part. Your current lower high should always be lesser than your previous high or lower high. Now, what do I mean by that? This is your lower high, this is another lower high, and this is a high. This particular lower high, in terms of the price, should always be what? Lower than this. Just take it for instance, as if you are going down the stairs, right? If you're going down the steps, right, you're always taking lesser steps all the way down, something like this, right? Going down the step, you're going all the way like this. So this current low should always be lesser than the previous one. This should equally be lesser than the previous one as well. And say, for instance, the buy or the bullish pattern, you are climbing the step all the way up, right? You are climbing it all the way up, all the way up. What is the rule? This should be greater than this. Rather, this should be greater than this, and the next step should be greater than that. That is just the basic concept I'm trying to establish here. All right, that's the basic concept I'm trying to establish. Same as this one too. All right, the current lower high should always be what? Lesser than the previous lower high, or even lesser than the previous what? The high. Same thing as the lows as well. Your current lower low should what? Be lesser than your what? Your previous low or your previous lower low. All right. This is the second rule too. Your current low should be what? It should be lesser than your previous low or even your previous lower low. Just the same concept, right? The same concept. And this third rule is in this regard now, from everything you've heard me teach about the uptrend, which I said that the eyes are the ones being targeted. That is the eyes the market is trying to take out, right? And the lows are the ones being protected. Can anybody tell me in the downtrend, which one is being targeted, which one is being protected? Can anybody tell me that? What would you think? What is targeted? So, okay, I'm getting the lows are what? Targeted. Amazing. So for this, whenever the lows are being targeted, and that is how we get a zone as well, right? Whenever the lows are being targeted, it gives you an idea of, oh, the market is trying to break more lows and the market wants to come down. And this is where I get multiple what? This is where I get multiple zones. Now you guys see how I'm catching my zones. This is a very good way to even teach you how I get my zones, right? The lows are being what? Are being targeted. As the market keeps going down, it's being targeted. Now, if the lows are being targeted, what is now being protected? What is being protected?
The highs.
Yeah, the highs are being protected. Exactly. The highs are being protected. This is just proper um theory, but trust me, this theory can change the game for you. Now, the eyes are being protected. This particular place is being protected. What does it mean by being protected? Market would not come to this place. Market should not necessarily come to those places, right? To take them out. Now, this is what happens sometimes. It's not all the time market just respect the zone. Sometimes it goes all the way in, right? And that's why we have different teachings, different type of analysis tell you different things you should be looking out for. Some people use Fibonacci to know where should I expect the market to get to and start going down. Some people use Gantt charts. Some people use different things. Now, what I want you to do is train your eyes so well. Always look out for a zone to another zone. Half of it is 50%. And most times that's where it will retrace from. If it doesn't retrace from 50%, it's just going to push in a little bit. And that's going to be like 60%. Some other strategy, they call it the what's it called now? They call it the premium and discount prices. It's still the same thing. Basically, we are just saying let the market try to do what? Push in just a little bit. If you're using Fibonacci, they tell you to look for the 60%, or even sometimes the market gives you what? 70 something, right? Everything is just telling you that let the market get to 50, half of it, most likely to retrace. If it doesn't retrace from there, then let it go all the way in, right? But the most important thing, it shouldn't get to this place. Once in a while, for instance, gold, sometimes gold can get there, but most times it shouldn't get there. It should at least give you some previous zones and all of that for you to be able to milk the market, right? So this is how a proper trend of the market should be. Now, why do I love to get in with this particular concept? The reason why I love to get in with this particular concept is, say, for instance, this is my close of the previous day. All right. Say, for instance, or let's say this is my low of the previous day, and the market has broken down. Do you know that if you enter immediately, the market breaks down? One thing is bound to happen. For every market that pushes down, market will not just continue to move in that direction just like that. What will the market give you? It will break out, right? It will break out, and after it breaks out, the next thing is going to give you is what? A correction. We explained this in the last class, right? And it's on the YouTube in case you want to check it out. The next thing it gives is what? Correction. Now, when this correction happened, what is the next? What should be targeted? That is the question now. What should be targeted? If it's a downtrend, this zone should be targeted. Do you guys agree with me, right? This zone should be targeted. If this zone should be targeted, this is a very good entry for me. This is a very good entry. And my higher or my lower high is the place I will get in from as an entry. And I go all the way in. This is a proper 1:2 risk to reward. If you are able to hold on to this trade. You guys see how I take my trades now. This is what I wait for. Now, what I've called this thing is this is what I call it. This is what I call this now. Whenever I'm getting in on any trade, let's say the market has broken out of a key zone, I call this one my directional bias. Directional doesn't mean I'm going to enter. It's just giving me an idea that, oh, the market has broken down, right? The market has broken down. All well and good. So I am expecting a sell. But if I sell at this point, there's tendency for the market to do what? To still retrace. There's tendency for the market to correct itself. So rather than just getting in around here, somewhere around there, rather than getting in around there, why not let the sell do its thing and let the market do what? Come back up. That is me for you. I want the market to come back up to that zone, then give me what? A proper lower high and my lower eye should give me my profits. The lower eye should be able to take all the zones out, right? It should take all the zones out and give me my what? My new lower low. Do you guys see what I did now? So for my entry, which I would like us all to try to emulate as well. For my entry, I prefer not to enter when the market breaks out. I prefer to enter when I get a what? A new lower high. I believe that's what it's called, right? A new lower high. Let me clone this out. I prefer to get in from this lower high than just to get in anywhere around there. Why am I looking for that? I'm very key on my stop loss. I don't want to risk too much. Now, the objective for me getting this my lower high here, the main objective is in terms of my stop loss. Um, just a minute, guys. Please, can you mute your mic? Can everybody mute your mic so we can have a clear recording, please? I'm going to mute some people, so please kindly mute yours as well. All right. Thank you so much. Now, what is the benefit of getting an entry at the lower high? There are two things that this will give you. The first reason is in terms of your stop loss, you'll be risking little. If you guys can agree with me, there are sometimes I call some signals and it's just instantly you start seeing profits, right? Almost instantly you start seeing profits. The reason why you see that is because it's at the lower high and the market just starts selling all the way down. Or probably is at your what higher low and it just starts crashing and taking out all the highs. Do you guys understand that now? So the first thing you want to know is what trend am I on? Am I on a bullish trend? Am I on a bearish trend? That is why I told you the rules of a bullish and a bearish trend. That is the first and the most important thing. Once you're able to establish what type of trend I'm on, your question is, do I want to take the correctional move or do I want to take the impulsive move? Right? If you're going for the impulsive move, that is what I would love. If the market breaks out of any key zone, the next thing I'm looking out for is what? I want to make sure that this market is able to give me a proper higher low and then I move on. So everybody, I will always love us. You can go back and do your back testing and all of that. You agree with me? We've not had any major loss on gold for more than 2 to 3 months now. And why is that? Because of this information. I don't feel I should actually put this information out there to the public. I should actually keep it to myself. But I feel like we are all family and everybody needs to grow, right? I noticed there were times when I call signals and there are losses. But when I saw the trajectory of things and I saw that, yo, this is being helpful, I felt like I need to let everybody know. This is one of the things that has been helping me to get proper entry, and that is why I want everybody to also be able to understand the chart the way I see it as well. So in case when I'm not even active, you can actually make amazing money, put out the profit out there, and we'll all celebrate with you. All right. So going forward, always know that in the market, just like gravity, there's nothing that is going up. There's nothing going up that will never come down. So if we are in a bullish market, no matter how it goes up, it will still find its way down. Just like we have gold right now, gold is just skyrocketing all the way up. No matter how it goes up, it's going to do what? It's going to come down. So you can be patient enough to wait for it to come down to meet you, and then from there you do what? Catch it all the way up. If you understand that to where we just stop, please drop two in the chat box. I want to know that we are following. If you understand that all the way to where we are, amazing, 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 amazing. So I've been able to explain all of this. Now let me now show you on our chart. Say for instance, I'm on a particular trade, or rather, instead of a particular trade, I have this particular structure. The previous day we have something like this. All right. We have something like this, and the market closes here. You know, the first thing you should look out for is what? Your high, your low, your lows, um, yeah, your low, and then your close. Those are the first three things you should look out for. Your high, your low, and your close. And that's yesterday. Now you extend it into the future, And after you extend it to the future, the next thing is to do what? Look for how market will react of these zones. That is our idea, right? Now, the market will do two things. A minute. The market is going to do two things. Either it breaks to the upside, right? Either it breaks to the upside and give you reasons to look for a buy, or it's going to break to what? The downside. Who's calling me? So either it breaks to the upside, right, like this, or it will break to the downside. And this is me for you. Now, before it breaks to any side, this is one of those things I look out for. Look at things like this. Remember our class on zone. I explained vigorously when I was teaching about zones, right? That whenever you see a structure like this, like a alpha or a V, whenever you see those structures, those are places where markets react off, right? And those are what we call our zones. So first thing I'm going to always look out for is there any zone that market is going to react off? I draw that out. So what is alpha? Alpha, omega. All right, so this is your alpha. Something like looks like this. When the buyers change to sell, this point here is like where the market changes entirely, right? Oh, so sorry about that. Oof. Okay. Then let me take it again. Someone said no sound. Can you guys hear me now?
Yes, we can hear you.
Oh, okay, okay. So I guess I'll take it from the alpha section again. Just a minute. All right. And I hope you guys can see me as well, right? Can you all see me? You can see
100,
me
100,
clearly. All right.
100.
Amazing, amazing, amazing. So, like I was saying, what is alpha? I said that whenever you spot um a buy turning to sell around this zone, you can take that out. This is more like an alpha. When you see something that looks like this, right? I call it alpha, right? So every eye you get as your eye of your previous day is like an alpha zone, right? And every low is more like your what? Your V. That is why I have these two put out there. Now, your high and your low and your close, they are key zones, right? Those are the three major zones. After that, you can now look out for other subsidiary zones. Now, for me, if the market is going to break out like this, right, to the upside, it's going to do something like this. It's going to break up and probably push down a bit. You see that it no matter it keeps going up, it will do what? It will come down. Now, at least if it comes down again and it start giving me like maybe patterns, now I know I can do what? Push all the way up and go all the way with it. Now look at these two things. If I had gotten in from somewhere around there, I'm still going to get some sort of loss to an extent. It's not like loss is not good, but I'll be reading in some loss at some point. But why not be patient? Sometimes it might not even retrace this small. It might go all the way up here and then come down. I would prefer to do what? Wait for the market to go all the way up, right? I prefer for it to wait, go all the way up and come down and then go all this way. Now, there are two things involved in this type of trade. The first thing is if you're a scalp trader, right? If you're a scalp trader, you can go to your 5 minute time frame and catch this move. Sometimes, whenever I feel like scalping trades, I go to 5 minutes, sometimes even 1 minute, and I can see like seven. If it's 1 minute, you can see up to like 10 candles, and you can milk all of those candles all the way up, right? But if I'm okay, also like a scalp trader, 5 minutes, you might see three 5 minute candles that will just give you 150 minutes. You can milk it up. You can stack it, dollar cost average. You can maximize this move. When it gets to that key zone, go away from the market because the reaction is going to happen. You can either do that as a scalp trader, or if you want to be a day trader, be more patient. Everything that goes up will find its way back, right? And if this is a proper buy trend, what will you do? It will go up to this place, come back to this place, and then give us some level of resistance and then push all the way back up. So it's better for me to wait for the market at this point rather to just enter from here. Why? Because if I enter from here, I'm in some profit, I'm all excited, happy, but then the market start going back into my entry and I'm in loss. Why not wait for the market to come back to this zone, right? After it has done a lot of manipulation and all, and then just start going all the way smoothly in profits. Do you guys understand the bias behind this? You understand the concept, right? This will give you better entries. This will give you less stop loss. Trust me, this thing I'm telling you, it will give you what? Less stop loss. But there are times when you, now let me show you the difference now. Some people would do this because it has broken out already. Oh, you're all excited. Oh, everybody, let's start getting in. After the first candle, let's start getting in. Okay, you get to this zone, you're all excited. And the next thing that happens is what? The market breaks down. It gets to this place, you're like, okay, it's still going to push up. But no, it's not going to push up. It comes all inside this and then starts selling. You see this? Now imagine you entered for a buy here. You'll be totally taken out because of this structure. Do you guys understand what I'm just saying? You'll be taken out because of this structure. This exact thing I said happened. I guess it happened last week. Let me go and check. Let me go check it out. It happened. I guess this is it. This is it. This there was one of those days. It happened. It pushed up and then it started selling. Which of those days? Let me check the other one. Let me check. I want to make sure that I can show you that thing. Okay, this one, yeah. This one. Was it this one? This is current. Okay, I guess it's this one. I guess it's this one. Now the market pushed up. Is it this? I'm not sure. But I'm trying to look for that particular one. I'm trying to look for the particular one. But I can use this as an example. All right. I can use this as an example. This is the highest place it got to. What day was it? This is Friday, May 26th. Okay, so let me go to the other chart and let's do it there. The Friday, which is last week Friday. If I'm gonna trade, yeah, to trade on Monday, let me put in the high, lows, and close and all. So if I'm gonna get my high, my low, and my close, this is my low, this is my high, and this is my close, somewhere around there, right? Now, the first thing is, oh, what is the, for me, I love to look for zones, right? The market came down here, pushed up. There was some level of resistance around this place. The market didn't even get all the way there, but there was some level of resistance around this place. This is, for me, a bit of a zone. It didn't even get all the way up there, but it pushed up, and immediately after that, it came down. You probably will feel like, oh, because it has gone up, it will come down here and push up. If you had that idea, but because it has broken up and it's going to keep buying, trust me, it's not enough. Now, what happened? It broke up, it came into the close, came all the way down, and then retested. You see that it retested and kept coming down. You can see how many multiple times it was retesting that zone, and then the market did what? Sold all the way to what? The low of the previous day. It did this multiple times. I guess it was around this zone we were able to get an entry. Yeah, on Monday. This was our first entry on Monday. We caught this sell on Monday, right? It came all the way down, right? So what I'm trying to say is this: you also want to pay attention. No matter what, market will always give you a structure. You need to always know how a bullish pattern looks like and how a bearish pattern looks like. I will never feel like there's what they call FOMO. I will never have that feeling of FOMO. I will never have that feeling. I used to have it, but going forward, I'm not going to have that feeling of FOMO, right? And why won't I have that feeling? Is because I know market will always give us that structure. Now, look at what the market has been doing now. The market has been buying, right? All of this, it's been buying throughout the London session, since Asian session rather, it's been buying all the way up. let me remove all of this information and let's put in the information for this now. So I have my low somewhere around here. I have my high somewhere around there, and I equally have my close somewhere around there. All right. So I have those three key zones already: the high, the low, and close are these three zones. Now you see what the market did immediately. It pushed up very healthy to close the close of the previous day, and then did what again? Closed above the high. It broke, came down to retest it, and started pushing up. Change it to see that structure. It broke, right? That would have given you a good entry. You see this other candle, it broke, came back to retest it, and then pushed up. At any point in here, if you were available or you were online, this would have been a very good setup to what? To catch all the way up. All the way up. Now that it has done its thing, what are zones? What are those zones you want to start paying attention to? Those or your V into that market will most likely have been created first. And when I say zone, it's like some level of the buyers can't buy anymore and the sellers are there. All right. That is another zone. If you look all the way to this somewhere around here, and that's where market is currently reacting off. Now the question is, if this market, if it can break all the way down, right, and come back to retest it, and it can't keep going up, it's going to sell all the way to this place. I don't know if you guys understand that, right? So if at any point in time you miss this trade, I know that feeling of FOMO, fear of missing out, it's always there. But trust me, remember this thing I've said. Anything that makes a market go up, it will find its way to come down. I was talking to one of my boss, right, in the forex industry, and we were expecting this, we were expecting the buy very soon because we know the market has been selling for too long. There's no way to just keep selling. It will find a way to correct itself, right? And that's what it's basically doing right now. It's correcting all of this move. At some point, people were like, why is gold just selling? Why is this selling, selling, selling? Now you can see the market is taking all of those sales back. And who knows, it might probably do what? Start selling back. Now, what is my bias for today? I'm expecting the market to push down all the way to this place. All right. Um, okay. So sorry about that. Right. So this is what I'll be expecting the market to do, right? I want it to come all the way down and push all the way down here. Now, this is the first thing I wanted everybody to understand how the structure happens, the buys and all of that, how they happen. This is a buy. Why do I want it down? Now, this is the reason why I want it down. All of this space, what is happening here? Let me even use a box to explain it to you. All of this place, what is really happening here? You can't just let it be. Market will always create a form of what? Equilibrium. Now, say for instance, this is your low. Now let's even do it again. This is your low, right? This place is your low. Where's my text? This is your low, and the low is giving birth to what? A high, right? You are expecting it to get to, just using your eyes, half of this line is somewhere around there. Now, if you are going to use a Fibonacci tool, right? If you're going to be using Fibonacci from here to this place, half is what? Same here, this place. You're expecting it to come down here. That is one. if you don't want to use Fibonacci tool, there are some people that use Gantt charts from here to here. Where is half? Same place. And if you guys remember what I said, using your eyes alone, half of this place is what? Is 50%. So I'm expecting the market to do what? Sell all the way to that point. All right. So that's basically the idea. I would like to take our questions. If you have any questions regarding this, if you don't understand, just let me know. And if I see the signal, we probably might not get it on this call, but once I see the signal, I will post it. Someone says, I don't understand. Can you kindly unmute your mic and explain where exactly don't you understand? So I can explain better.
Sir, good afternoon, sir.
Good afternoon, sir.
Please, is this one that you explained just now? I don't understand. Can you hear me?
Sir, what did you say?
Is this one like this one, this now that you explained? I don't understand it. Please, can you come again?
Which one? Is it this one I spoke about?
Yes, right now, yes.
All right. So what I'm saying is this, right? This low gave birth to this high, right? And the market needs to try to fill it before it starts going up. That's what I'm trying to say. So two things might happen here. The market that came all the way down here, this market that you're seeing here, push down here, it might come back here and then come all the way down, right? It might probably do this and before it goes up. But the most important thing is all of this space is left idle. It needs to fill it up. Do you understand? It
Okay,
needs to
sir.
fill it up. That's the idea.
Okay, sir.
All right. Any
So,
other question?
how about if the market?
Sorry? What did you say? All right, so we have Mr. Oluwatosin.
Good afternoon, sir. Can you hear me, sir?
Yes, I can hear you now. Mr. Oluwatosin, can you hear me? All right, while we're waiting for Mr. Oluwatosin, can any other person with any question? All right. So you know what? I'm just going to let us all know that, okay, this is what I want you to work on, right? I need to,
Okay.
like, anybody? Oh, the network is bad. The network is bad. So please, I want to, I have to jump on a different meeting now, but this is what I'm going to say. I'm going to be on the chat. And you know what I do? Whenever I'm seeing any signal, I will give you the thought process. I'll record it for you so you can see what I'm seeing in the market. Okay. So I'm going to be on the chart. I'm going to watch it. Even if I don't see it on gold, I can see it on other currency pairs. When I see those movements, I will let us know. All right. Just give me a few minutes. Okay. So I have Sammy. Yeah. Sammy, do you want to ask your question?
No, this is Mr. Tosin. Can you hear me now, sir?
Okay, Mr. Tosin, please go ahead, sir.
All right. So from your explanation, normally the market should like reverse for like, let's say 50%. So when you look at where you have your zone,
Where's that?
hello?
Hello, sir. I can hear you.
Okay, all right. So if you look to the left, is there any zone? Will you mark out any zone? Yes, that spot. Go a bit down. Go a bit down, sir. No, yes, that area now. Can you mark out more like a zone there, like will I say the opening of a particular day?
Yes, yes, that
Yeah.
also works. Yeah, that also works. Yeah, so I can have something like this. Somewhere around here. Somewhere around here.
Okay, sir.
Right.
So
I have that
yeah.
too.
Oh, okay, because
Right.
I'm trying to see if it's like the right way to like mark out your zones. I know some,
Yeah. So
okay.
you know what? I'm going to teach one day strictly on zone. I'm going to teach one day strictly on zone, right? I'm going to be
Okay.
teaching one day strictly on zone. So don't worry, I will show us how to be able to target all of these zones very soon. All right. I want a particular day, just zone. That's what we'll be dealing with on that particular day. Is that
Okay.
okay, sir?
Yeah, very well.
All
Thank you,
right.
sir.
All right. Thank you so much. All right, so I guess that's it. So please just give me we need to end very early, right? But I will be on the chat and I will communicate on how it goes, okay? So just be active, just stay active, guys. Just stay active and I will communicate on the platform. All right. I really have to go now. So sorry I had to end this abruptly, but I just have to go now. All right. Okay, Mr. Big Danzy. Yeah, Mr. Big Danzy, how's it going?
So it has been going fine with this your strategy.
Amazing, boss. Amazing. Amazing.
Sir, please, can you mark out your zone? Maybe you can screenshot and drop it on your
Yeah, I'll
platform
do that. I'll do that. I'll
because
do that.
sometimes I work with it and it also work for me very well. Before you call out signal, I'm already on profit on the signal
Amazing. Wow.
because of
Amazing.
those zones. Because I noticed that market always break all those zones that you mark out.
Exactly.
No,
Exactly.
since all this while, also on Asia session, it also immediately it breaks and retrace. I will enter my trade and catch my profit and leave the trade.
Yeah. So don't worry, I'm gonna mark out the zone just shortly after I'm done with the class, right? I'll mark out those zones for you.
Thank
All
you,
right.
sir. Thank you.
All right, boss. Thank you so much. All right, guys. Thank you so much for taking time out to join the call. And yeah, I'll communicate on the platform, okay? All right now. Peace and love, guys.